Here we are again with Florida Living with Neil Archer. Everything real estate, your real estate source here in Florida, and a few other things thrown in there as well. So this week I have Mark Daly again from Route One Mortgage. How are you, Mark?
Nice to be back.
How's your week been?
Excellent.
Good. Living in South Florida, we're living the dream. So listen, I wanted to chat with you today regarding, because we've had a couple of these issues in the past where we're going to talk about the people that have gotten a little older in life and their money is probably not as good as what it used to be, their income. And we're going to talk about reverse mortgages. Now, listen, reverse mortgages, to me, when you say that word, and I've said it to people in the past, I get a response. And it's all not usually a positive response. There's a little stigma attached to reverse mortgages. But you're the reverse mortgage guru. You do a lot of them.
I do a lot of them, and they have the same reaction when
they
we
really?
bring it up. Yes.
Yeah.
But it's changing. It's changing. It's probably the most misunderstood program that we have.
I think so. Yeah.
And it's a wonderful program that was created actually through our government to help seniors stay in their home and live a better life. But there's been a lot of advertising that AAG has done with Tom Selleck that's really kind of turned the tide a little bit, where now people are at least getting the facts for themselves. And what I've found is probably in the last maybe 3 or 4 years, it's really changed the perception. And it's because AAG has done such a nice job with the advertising, where people have gotten the videos online and find out for themselves what the program benefits really are and what the downside is as well, which is also important to know both sides of the equation.
I think some of the, especially when kids are involved, right? Because you've got an elderly parent
Sure.
or elderly parents, and the kids are assuming that they're going to get their house one day, right? And so I think a lot of the kids think, why is my mum and dad going to do a reverse mortgage where the bank will now own the property? But that's not generally the case, right?
Yes, and a lot of the negative stigma came from really part of the housing bubble, where the whole market collapsed, back in 10 years ago, wherever it was, and so reverse mortgage were also lumped into that. But we had a colossal collapse in housing on every type of loan,
Right.
and reverse mortgages are included in that. But with reverse mortgages, it wasn't like people were doing short sales and foreclosures on reverse mortgages. They were keeping them because you can stay in a house when the market tanks, because you don't have a payment. And for those customers, they kept them for a long time. And then, once the loan had to be resolved, they were upside down.
So
But that's not necessarily a bad thing for the person who's living in
Right.
it.
So you just mentioned something that you don't have a payment. How can somebody not have a payment and they owe money on their house? So can you explain that a little bit?
Well, basically what they do on a reverse mortgage is they're deferring the payment to their move-out date, which in most cases, quite frankly, is when all borrowers pass that are on the title.
Wow, that's
And
amazing.
then the estate resolves it in the end. And in most cases, the way they structure them from the beginning is that there's almost as much equity 3, 5, 10 years down the road as there was the day the loan was originated. And that comes from the simple principle that you have an asset that's going up in value over time, and
Right.
you have a loan balance that's going up in value in time. And the value of the home is usually about double what the loan balance is originally. So over a long period of time, there tends to be about the same amount of equity in most cases.
That's unbelievable. So somebody who's, let's say they're in their 70s, they're in a property that's worth $300,000. Let's say they owe $100,000 on their property. So, they're paying their mortgage still from what it was at the time that they got the mortgage. They're paying the taxes and the insurance. So can they eliminate that $100,000 and not have a payment?
Yes, they can, as long as they meet the criteria and the value is there. The way reverses are a little different than most loans. The amount the loan can be is contingent upon the age of the youngest borrower,
Which is what?
which is 62.
62. So if you've got somebody who's 62 and you've got, a spouse who's 55, you can still do a reverse mortgage?
Yes, you can.
Wow.
Yes.
That's unbelievable. So, talk about escrow, because when you have a mortgage in Florida, you have principal and interest, and then you have taxes and you have insurance. And on a conventional mortgage, a regular mortgage, the escrow is collected as part of your monthly payment. Is that the same case with reverse mortgage?
Well, you have an option. You can either, just like any other loan, you could either decide to escrow it, but it works a little bit different on a reverse because on a normal escrow, they're putting money aside for basically the next year
Yeah, correct.
on like an annual
Yeah,
basis
yeah.
in a sense. But on a reverse mortgage, you're doing it for the expected lifetime of the borrowers. So in most cases, they're collecting, depending on someone's age, about a good 15 years of projected taxes and insurance. So it's a massive amount that
Wow.
gets put in there. But what's wonderful about that is if you decide to set it up that way, then not only does the borrower not have a mortgage payment, but they also don't have to pay the taxes and the homeowner's insurance because it's paid through the escrow.
Ever?
Well, the expected lifetime, which depending on the borrower, if it's 15 years, if they outlived it, then they would have to start doing it.
Oh,
But for the
okay.
most part, they try to, most ones I've seen have been at least about 15 years into the future.
That's unbelievable. So they have no payment whatsoever. Because that's one of the things where, when you're getting older and, the American dream is home ownership, but it's also the American dream to pay off your house and you own your house free and clear. But we have increasing property taxes, and even if you're homesteaded, it's going to go up a little bit every year. And then you've got insurance, because insurance with wind, we're in a hurricane state, and, a couple of hurricanes fly through here, in a year, and all of a sudden the next year the insurance has gone up. So that protects them, that even though these insurances and the property taxes increase, they still have no payment?
Yes, as long as there's funds in that escrow account, and like I said, they push it out about 15 years or so.
That's unbelievable. So what about when, let's say, it happens to all of us, it's going to happen to you and me, but we get to a place where, one spouse has passed, there's another spouse that's getting ready to pass, so and they pass. What happens then to the house if they have a reverse mortgage on here? You've got siblings here who say, I want the house, and what happens in that situation?
Well, it works fundamentally the same as it would if it was any other type of a mortgage.
Okay.
Where whoever is the heirs to that property has the ability to either keep the property and get their own loan, or to sell the property, pay off the reverse mortgage, and keep the difference.
So I guess a lot of people, when they're looking at reverse mortgages, it's because, their income is limited, and, I think number one choice would be to refinance, right? And so there's a thing called reverse mortgage purchase.
Yes.
So explain that to me a little bit. What does that enable a borrower to do in order to use the reverse to purchase a home?
Well, what it essentially does is there's two different kind of ways to look at it. One thing it does is it increases somebody's buying power. For example, say you have a customer that has $300,000 and they want to buy a house, and they don't want to have a mortgage payment.
Okay.
Well, if they have $300,000, then they're going to buy a house at $300,000 to avoid the mortgage.
Yeah.
But on a reverse mortgage for purchase, contingent upon the age, because it's age contingent as far as what the loan to value is and the down payment requirement. But just to keep it simple, say you have someone that's around, say, 63, 64 years old, the loan to value is about 50%. So if they have $300,000, they could buy a $600,000 house.
Really?
Yes, and put down the $300,000. Or the other way to look at it is say they want to buy a $300,000 house. Well, rather than part with their full $300,000, they would use about half of that, say about $150,000
To get into the $300,000
to get into the 300, and then keep the other 150 in order to live a better life and have a backup plan.
That is unbelievable.
So either way, you win.
I know, it's great. I'm glad I asked you about reverse mortgages. So guys, if you are in that situation where you're getting a little older and your income is diminished, the cost of living is getting higher, and not necessarily you're getting the same amount of money coming in from your pension every month, and it has to go a long way. So if you think that reverse mortgage could be for you, you need to talk to Mark, because I know that you've done some amazing deals with some guys that were in that situation, and they're really, really enjoying life now.
Well, we live in South Florida, so if you had an additional $150,000 in the bank account, I'm pretty sure you can
Absolutely.
find something to
Yeah,
do with
you
that.
never know when you're going to need to dip into that, just to enjoy life a little bit more.
Absolutely.
Mark, tell everybody how they can get in touch with you.
The best way to get a hold of me is to call me at 561-252-0346. Also, you can visit our website, www.group1mortgage.us.
Mark, thank you so much for coming in.
Thank
It's been
you.
a pleasure. Guys,
As
we'll see you
always.
next week with another guest. Have a great week.